Everybody's waiting for the stock market to crash. And the big question, when is it gonna happen? And my honest opinion in this video. Hello there, my name is Thomas and welcome to my YouTube channel where we talk all things trading, finances, and money in general. And if you're new to the channel, please consider subscribing. A lot of the things to learn here. Before we begin, wanted to remind you about the Black Friday that is happening at Thomas Krallo. All learning programs at minus 50% off. If you've been looking to join my famous university-grade trading education, now here is your chance. Go to offer.thomaskrallo.com, also link in the description, and join at half the price. Seats are super limited, and since the previous video, a lot of them have already sold out. So join in before all of the seats sell out, and they will sell out really soon. All right, let's get right into the topic of the upcoming stock market crash. So let's go and take a look at the SPX or S&P 500 chart just to get an idea of what's going on. As of right now, we can see an incredible climb to its all-time high. Always, all the new all-time highs are constantly coming in right now. So right now we're at about like 4,700 something, a bit more than that. Let's see, 4,700. And before this big sell-off represents the beginning of the COVID situation. So this was the first strike of COVID that took S&P 500 from roughly 3,400 down to 2,200. So it was an incredible drop, and everybody was panicking and thinking this is the end of the world. But look at this. It retraced so fast, and it has taken off to basically double, more than double in value since the situation with COVID hit the market. So, and this in general just looks absolutely insane, right? A lot of the people are saying that this is one of the biggest and the hugest bubbles the market has ever seen since the Great Depression in 1930s. And a lot of people are saying that this is the hugest bubble that has ever been seen since the beginning of the 20th century, from the times of the Great Depression, when the New York Stock Exchange just basically ceased to exist almost. So, and this is a very similar situation. So the question is, why? Where did this huge, insane climb has come from, and what can we expect from it? A lot of the people that I know have been trying to short the market. They shorted Dow Jones, they shorted S&P 500, somebody shorted it from 3,500, then somebody shorted it from 4,000, somebody shorted it from 4,500 right here in this correction, thinking that this is going to be the beginning of the end. But it keeps climbing and climbing and climbing, and a lot of the people are getting liquidated, and a lot of margin calls are happening with this kind of stuff. But there is something that they don't realize, that there is going to be a really good indication which you can use as a reason to actually short the market, and that's going to be discussed in this video, of course. And also what I'm going to discuss in this video is going to be super useful for crypto traders and crypto investors, because this indication, this signal, so to speak, is also going to be very important from the crypto market, because if the stock market crashes, the crypto might suffer as well. So it is important for both stock traders and investors as well as the crypto investors. So let's take a look at exactly the reasons why this climb has happened, and this simply parabolic climb that has no meaning. I mean, every single stock, the biggest stocks that you can take a look at, is going to be overvalued. So there are different company valuations. The most important one is the general valuation of the company, which just states, whether it's overvalued, undervalued, etc. And the most of the companies right now are overvalued by at least 2 times. So their shares are selling at twice the price of their fair market value. It's pretty much like selling a Rolex that is worth, I don't know, $30,000 for $60,000 just randomly. It just makes no sense. So the same thing is happening right now when the world's economy is not really that very strong, with everything that is going on in China, with the ever-great situation with the housing market in China, as well as the overall situation with the businesses, all the problems that the pandemic has brought upon the nations. And in general, it's not a very good outlook. But if you look at S&P 500, it seems like we are just swimming in gold. You know, it is incredibly nice and the whole world is prospering while it's not. So it is a market paradox, which is, in other words, it's a bubble. So once the bubble bursts, a lot of the money is gonna just stop to exist. It's gonna be simply erased. And this is quite dangerous simply because it can lead to another crisis. And the effects can be so devastating of something as inflated as this that it can bring whole nations down to their knees. So it is actually quite sad and quite dangerous. But here is a reason why there is this climb. And there is a very simple reason. And that is Fed printing money. If you just think about it, a huge portion, like 40% of the United States dollar that exists right now was printed in the last year or year and a half. You can correct me in the comments down below. So a huge chunk, almost half of the United States dollar that ever existed has been printed in the recent short period of time. So it is absolutely insane. So what happens when the Fed is printing money? It goes where? It goes to the banks. And then it doesn't stay there because nobody likes cash, because cash is important for simple people who want to buy cars and watches and this kind of stuff. But for the big boys, cash is dirt, it's paper, it's useless, it's depreciating. So they always try to put it into something to at least cover for an insane level of inflation. What's inflation? Inflation is when, this bottle of water costs $1 in the store, and then because of inflation, it can actually it might rise to $1.10, $1.50, $2. So for $1, you'll get less of whatever. So this is inflation, when the money is losing its value. As simple as that. Therefore, big players who have billions upon billions of dollars under management, they cannot afford to keep cash and see it burn like 6% per year. It makes no sense. So they have to put it somewhere. And currently, bond rates are at their all-time low at 0.25% a year. So nobody is going to be putting their money into the bonds, the government issued bonds with 0.25% interest. So when the interest rates on the bonds are so low, the money goes elsewhere into more high-risk assets. And for the most part, it's going to be the stock market. So once again, Fed is printing money, it goes to the banks lend it out, people get the money or the funds or whatever, they want to use leverage to make as much money as possible, as fast as possible, and they put it into the markets. So, and that's why this whole climb simply represents Fed printing money and the money coming to the market. And that's it. So, the conclusion here is extremely simple. When is all of this going to come to the end? And that is when the Fed is going to finally announce the increase of the bond interest rates. So as soon as there is going to be a hint, and of course we're going to start seeing that because there is a lot of insider trading and big banks and investment funds and hedge funds, they know this ahead of time. They will know this before I know it or you know it or any other retail trader knows it. So there is going to be a big correction coming in the market even before it's going to be announced because everybody wants to be first and exit right at the top. So it's going to probably start happening and the market is going to start correcting maybe a week or two before Fed is going to be releasing the news of increasing the interest rates. And once it releases the news, then the market is going to drop even more. But that's probably going to be the cue for us retail traders to exit our positions in the stock market and sell off, or to hedge our positions. So perhaps short the market or use futures to open in the trades, the short trades in the opposite direction to compensate for the correction, then use the profit of the futures to actually buy into the stocks we have in our portfolios. If you're so inclined and you don't want to sell off your portfolio, so that's one of the ways to just hedge your portfolio. So, and this is what I'm going to be looking out for, because that's what we do at Crowler Trade Ideas as well. And we're looking for these indications in the market. And right now we're really hunting for this information. When is Fed going to be increasing the interest rate? So as soon as Fed starts increasing the interest rates, the whole money that has been put into the biggest companies and stocks in general is going to be pulled from the stocks and put into the bonds to actually protect the money from the collapse that is going to happen in the stock market. So this is a very simple arithmetic. And as for right now, if Fed keeps on printing money at the current pace, and there has been some talk to actually start reducing the amount of printed money, okay, but the market still is not reacting to it almost at all because everybody is so believing in this huge climb and into the prosperity and the positive outcome of S&P 500 growing infinitely. But we all know how this ends. Look at 2008, for example, or in 2009, the crash of housing market that started with Lehman Brothers. So this is going to be pretty much the same situation, and it's gonna tumble down the stairs. The question is, how deep is this drop gonna be? How much of the money is gonna be liquidated in the process? Those who start selling off in time will get out with some profits out of this ridiculous uptrend, but most people are gonna be left with nothing. And some are saying, if we look at this chart, some are saying, and I'm kind of are inclined to believe this, that we might actually go below the low of the first COVID wave hitting. So we can go below 2,300 in S&P 500. So it can actually drop 50%. And I think it might go even lower, down to like 60 or 70%. We can actually go below 2,000 in S&P 500. And if you think about it, there's going to be the region where companies are going to start trading around their fair value, or maybe go a little bit below their fair value on average. And this also can be a very good cue to sell off your altcoin portfolio or Bitcoin, Ethereum, because most of the time crypto market isn't really that capitalized. It's not capitalized enough to be super independent. So there is a big risk that once S&P 500 start dropping and Fed increasing the rates and everything is going to be going into the bonds, then the crypto will also be suffering because of it. And so that could be the cue and the beginning of the next crypto winter. So this is, if you're a crypto investor, keep an eye on at the news when it comes to Fed increasing the interest rates. There could be an opposite effect as well. I'm not saying that I'm 100% right here, but this is just the things that I'm going to be looking at. And when it comes to the time frame, so when is this going to happen? Now, we don't really know, but from what we are expecting, these talks are probably going to become more and more serious in terms of increasing of the bond rates, probably in the first 2 quarters of the next year. So probably before summer, we should see the rates increase. So we still have some time for Bitcoin to reach $100,000 and then altcoin season to start and have all the altcoins, super strong altcoins. And if you haven't watched my previous video, please take a look. Will make a lot more sense what I'm saying right now. And we'll see the altcoins skyrocket past their all-time highs, and then hopefully Tom Scrollo will leave with a lot of profit. And and then there's going to be enough time for all of it. And then we'll see increase of the interest rates by the Fed, and then the whole shit is gonna tumble down the stairs. So this is my outlook. Let me know in the comments if you agree with me or you don't agree. I know that there are many other things at play here, many effects, many things can change it any given moment at an instant. You have to be watching the market, you have to be doing technical analysis as well as fundamental analysis, macro analysis, blah, 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 depending on your approach and what you're looking for in the market and your trading or investing strategy. There are many things at play for sure. I just wanted in this short video, I mean, even this short video is taking me far too long already because I like to talk. Sorry about that. But if I would be covering each single aspect that I would be looking at as a professional investor, this would turn into an incredible and ridiculous 5-hour long video. So I'm just covering the biggest things. And once again, minus 50% Black Friday discount at Thomas Crollo. So if you want to become one of my students and go through my learning program, which takes like 5 months to complete, which covers all of this stuff, by the way, from active scalp trading, day trading, swing trading to long-term investing and portfolio building and asset management kind of a thing, private level asset management, then my learning program is designed for you. Once again, offer.tomscrollo.com, claim one of your seats at a 50% discount, and make sure to do it quickly because they sell out like really fast. Thank you for watching, and like the video if you enjoyed it. Please consider subscribing, and I'll see you in the next videos. Stay smart in the markets.